So today we are gonna cover how we are gonna create the rules under a rule set. So we have covered yesterday to create a counting method and to create a journal entry rule set. So now we are gonna discuss how to create these journal entry rules, journal line rules, the account rules, description rules, and supporting reference with the help of conditions, mapping sets, and formulas. So let's start first with the journal line rules. Now what these journal line rules are? In order to determine the debit or credit line for a subledger, the journal line rules are used. So if I go back to the application to explain this, let me go to payables application. Sorry, payables one. If I go to invoices, and if I go to manage invoices, I'll just check any invoice. Between 1st September and today's date. So let me open a validated invoice. Let me create accounting for that. It failed. Okay, let me search for some other transaction. So if we have any issues with our accounting rules, we'll get this error message that our accounting has failed. Okay, I have accounting status column here. So this one is accounted and validated. Let's open that. Okay, so this invoice is already accounted. We can simply see the accounting for that. Okay, so let me view all the columns. So now for this first line, you see it says it's item expense and the amount is getting debited. Now these are my journal line rules. The journal line rule says that okay, the item expense should be a debit line and the liability should be a credit line. So this is what we are gonna create now. Okay, makes sense? What we are gonna do? So users can determine if they want to merge line with the same account or not. So for example, in this invoice, it shows only one line, but I have say 3 lines here in the lines window. Do I want system to merge if they all are item expense line into one line or want to show it separately? So that's another option which this rule set gives you. So in case of same application, link journal line option helps to establish a link between accounting data related to each other as well as across applications. So there is one more feature to link your journal lines option. Since we are doing the seeded options, that is our payables and receivables, this feature is not available to us. But if we are doing the FAH and we have some external applications, we can also link our journal lines. So why we create journal entry rules? We create them to determine whether my subledger entry line is a debit line or credit line, and whether the lines with the same account should be merged, and if they merge, what's the accounting class of this. So these are my accounting classes: item, expense, liability, and these are my debit and credit lines, and this is the account. So if the account is same for all the lines, we can tell system to, okay, merge all my debit lines, merge all my expense lines, but show all the liability lines separately. So it's up to us how we configure it. Now how we are gonna create the journal line rules. So we have the options to create rules are what will be the side, whether it's a debit side, loss side, gain, or a credit side. Whether we are gonna match the merge the matching lines. We can do only debit or credit. We can merge all the lines, or we cannot merge the lines. This merging option it only impacts my subledger accounting. So you will see here that you have the lines merged or not, but in the GL this option is not applicable. I got a notification that Anusha has left the meeting. Okay, let's wait for a minute for her to come back. Any doubts on this part, what journal entry rule means? So what we were discussing is that what are the options available to create your journal line rule. So you can create your journal line rule with your sides, like what side your line will be. It's a debit line or it's a credit line. The second option we're discussing is your merge the matching lines. So you can merge your lines. For example, if I go to this example and if I just remove and if I say go to lines, so you might here have, okay, there is no lines here, but for example on your invoice you have 10 lines. Okay, so whether you want to merge all these 10 lines into one expense account or you want to show all these 10 lines differently. So this is what the merging option does. So here you see, right, only one line is coming for your expense. So if all these lines share the same account code combination, same line description rules, same accounting class, that is they all are the item expense, and the same supporting references, then you can merge all these lines. Now what are your accounting classes? Your accounting class, it can be your asset account, your liability, your expense, or your income account. And conditions. So you can use conditions to restrict your rules. So now this conditions was the one we had in our model, this conditions. Now this condition we can use in all our rule sets. So I can use these conditions with my journal lines rules, I can use with my account rules, description rules, or supporting rules. So before creating my journal line rules, let's come to the conditions, what these conditions are. So I'll just jump between these slides because I have to cover these side by side things. So let us move to the conditions first. They are at the end of the rules. Okay, conditions. So in the account rules or in the journal entry rules or any other rules, you may specify conditions for each rule detail line. If I open the standard rule, let me just close that and go to my standard rules. Setup and maintenance. Go to financials. And let me go to payables. If I scroll down and if I go to my journal line rules, So we have covered accounting method and rule sets, and next are our journal line rules. And if I open the seeded ones, create by application, yes. Okay, let us open item expense. Okay, so let's open the item expense account. Okay. When your invoice is validated. So that's the expense account we just opened. So here if you see, you have your name, short name and description. You have your event class. We created event classes yesterday, right? So this will fall under which event class? I have to mention that. Then I have to mention the side, that it's a debit line or it's a credit line. I have to mention my accounting class. So these were the classes, right? Your item expense was your class. Do you want to merge lines, debit or credit or all or none? Your Subledger application. And here below you have something called as conditions. So these are the conditions that we use. So this is a standard condition. So what this does is, you have priorities that determine the order in which rules are examined. In this rule, I do not see a priority, but mostly in your account rules, you have your priorities. It's a journal line rule, so there is no priority, but in account rules, you will find priorities. And depending on which condition is met, a different rule is used. So this rule can be placed on your line rules, your account rules, and your description rules. And the rule is only used by Subledger accounting if the condition is met. So for example, here you see that condition for this is if your invoice distribution type is equal to retrospective price expense, or is equal to item, or is equal to this, or is equal to this one, and your distribution accounting date is null. So it says that make this a journal line if these conditions are satisfied. So I can use any of my sources, my constant values in my conditions to create the journal line rules. So that's what conditions means. Constant values, if used these conditions, cannot contain special characters. So there are some of the limitations to create the conditions. In these conditions, you cannot use these special characters, commas, inverted commas and all. For example, if you say condition transaction type is equal to invoices and you put it in bracket, it is not a valid condition because these are not these characters which are allowed in your constant values. So remember, these characters can be used for your sources but not for your transaction constant values. So coming to the next part, how you create a condition. So this I'll cover mostly in your rules, like this account rule example, so I do not want to come back here. So I'll go back to my journal line rule at this place. I just wanted to explain what condition is. So let us go back to your journal line rules. Now what it says is your journal line rules are assigned to your journal entry rule set. So that was your question, Vignesh. What was the difference between these two? So these rules are part of your rule set. To create your rule, you will select values such as your sides. For example, when your Fusion Tables invoice is generated, the liability account should normally be credited. That's like a normal journal entry. So journal entry rule must therefore specify the side option as credit. On the other hand, when you make a payment of invoice, it must be accounted with the debit of liability account. That is just your normal accounting. So a separate journal entry rule must be defined to create the debit line. It's just the same thing which it says here. So if you open the item, if I open the liability account, what this example says is, let me just put it in search. I say liability. So here you see you have different liability accounts. So if I open this one, liability for your payment created, you will see it's your debit side. But if I open the same liability account for your invoice, it will be invoice validated. So if I open that liability account, it's your credit line. So you need to make sure that you enter this side as correct while defining the journal line rules. Then you have the merge option, which we have already discussed, and you have an accounting class. You need to select an accounting class to classify which journal entry lines rules are you creating. So for example, when a validated invoice is accounted, it's a normal practice that your expense account is debited and your liability account is credited. So these two line rules will be created for your valid invoice. And you will assign these rules classes respectively. So that's how you create a journal line rule. Now let's go back to the instance and let us define our own journal line rules. Any doubts with what journal line rule means?
I'm good, Priya, thank you.
Okay, cool. Now let us create. So first we'll create a debit line rule and then we'll create a credit line rule. And then we'll discuss all these options that we'll find on the rule. Okay, so we'll create our rule for the event class, that is invoice validated in case of payables. And then I'll create one for your receivables as well. Okay, so we'll go to manage journal line rules and I will click on plus sign to create the rule. So you see I have multiple options here. So first is the name of the rule. I'll just put it as the initials. Sorry. Underscore item expense. So first we are doing for our AP invoice, that is my invoice validated event. So once you validate the invoice, your journal entry should be your expense account debit to your liability account. So let us create that rule. So I'll say PK1 item expense. I'll put a description and I'll select my event class. So this will be for my invoice events. Remember, it can be different for your item expense account, will be your debit side for your invoices, but for payments it can be a different account, like we just saw the liability account, which will be changed if your event class is payables. So this is important. And then your accounting class. So accounting classes, this is my expense account. So I will say it's my item expense is my accounting class. So it says switch debit and credit. Do you want to record your debits and credits on opposite side when you reverse the journals? I'll say yes. If I reverse the journal, the entry will be automatically reversed for me. So I'll just enable this option. Merge matching lines. Do I want to merge all the matching lines or just debit or credit, or no, I do not want to merge? I'll say yeah, merge all the lines, or I'll say just merge debit with the debits, debit or credit lines. Now these are the conditions here you see. So it says enter a constant value and source directly or select a source. Now how to create conditions we'll discuss later on. For this rule I'm not going to enter any conditions and I'll move to the advanced options. So let us see what these options are. Conditions we have already covered. They are used to restrict the rule of line by controlling when this line is used. So I'm creating this line. So my condition can be this line will be generated only if my, say, okay, let's put a basic condition here. So I'm saying that this item expense line will come if my subledger application or if my source name okay, let me search with the application type. I'll just show you what sources are available. So for your payables application, you have all these sources available in the system. I'll say it's my payables application. So remember, if you can select your applications that you created, you will see all the sources which you have defined. Since I'm taking my seeded, it will give me the seeded sources. So you can use any of these sources here. So you have a big list of sources. I can say that this line rule will be created if my cost center segment is, say, some segment. Or I can say that my entered currency is GBP. So this line will only become for your GBP transactions. So likewise, I have multiple sources. You see, I have all the flex fill segments also here in the sources. So my condition can be based on any of these. So I'll say just, let's take this example. It says your invoice distribution number. Okay, what should be the number? I can say is not null or has a value. If your invoice number is not null, it has any value, then this item line should come. So this is how you create condition. So once you enter a condition, you will validate it. Says your condition. Now this validation just means your condition validation and not your rule validation. Make sense how to create conditions?
Yes, Priya. Yeah, thank you.
Okay, cool. Now let us see the advanced options, what all we have. Accounting attributes, which are the here. Okay, first discuss the accounting attributes assignments. So what does it mean is, you remember we created some accounting attributes yesterday. So these are automatically established based on your default assignments for that event class. So you can override this mapping here in this window, but they will be automatically assigned on the basis of your sources and your classes, which we created yesterday. Okay, let us see our advanced options. So these are all my advanced options in creation of the tool. The subledger gain or loss option, this applies to amount calculations for your primary ledger. We have discussed this option yesterday as well. So your gain or loss amounts, if you have enabled your reporting currency, if this option is selected, it will calculate your subledger gains and loss account calculated by your subledger application. Balance type option, again we discussed yesterday, it's my actual balances or it's my encumbrance accounting. I'm using the actual one. In your subledger gain and loss option, once you run your create accounting process, it determines whether an exchange gain or loss is calculated and derived based on your account code combination. If your gain or loss journal line rule is defined, now this rule is your debit or credit and not your gain or loss. So you can define your gain or loss item journal line rules. Then the account rule assigned to journal line rule is used to determine the gain on account to use. If the rule is not defined, the exchange gain or loss account assigned to your default exchange gain loss accounting attribute is used. So you can define your debit and credit lines for your gain and loss, and then you can define your account rule as well for that. Then you have the rounding class option. So along with the transaction rounding reference group lines and it calculates it together and it calculates your transaction rounding. So you have your rounding options on your AP or AR transaction level, and you also have your rounding class options on the subledger accounting level. So you have all your rounding classes here. So this is my item expense account class, so I will use the same rounding class. So it will group lines together to determine and say if your rounding is necessary. For example, if you have 10 item expense line on this class, this will group all these lines on the basis of your item class. Okay. For example, your business process requires that a cost center incurring an expense also bear the liability and cash outlay. So these rounding things, again, you can remember I said that you cannot use your link to, you do not have a link to option here. So if you select your standard your created application and not the standard one, you will have your link to ledger option here. Again, this feature is not available for your seeded definition. This is only available for your FAH ones. Then you have something called as your business flow class. Now what this business flow class means, it links logically your related business transaction. So for example, you are creating your payment liability account and your invoice liability. We saw, right? Your liability account will be your credit line on your invoice, and on your payment it will be your debit line. But the account is same. So you can link these using these business flow classes. So your first event is your invoice, which is created in the system, and then you create your payment. So the business flow from your invoice to payment is called as upstream. But if it is your payment to invoice, it will be referred to as your downstream. So you can select your business flow classes here. For my item expense, mostly I will select it for my liability account, which is same for my invoice and payables. Expense account is not there for my payments. That's why I will not select any business flow class here. So if you see, once the example here is of the liability lines. So I will discuss this and I will attach this when I create my liability lines. And I'll do multi-period as well then. Let me close this line as of now and create my liability line where I'll explain you this business flow class. Any doubts on this line?
Priya, would you just mind walking us through this business flow class again? I didn't really get the concept.
No problem. I'll come to that. So I'll come to once I create my credit line.
Okay.
We are not going to use it in my debit lines. Yeah.
All right, thanks.
Okay. Before going that, let me just show you what entries I'm trying to create. So once your invoice is validated, your journal entry will be your expense account debit and your liability account credit. Right? That's your normal journal entry. Now once you make payment for that invoice, your liability gets debit. I'm just making a very basic entry. I'm not creating anything, and your cash will be credit. Right? Okay. So that's a very basic entry. So what I created is, I have created for this line, debit line, I have created my EK1 item expense. So which, for example, say it will post to my 1000 account. This is my expense account. Now let me create this liability line. Okay, I'll just save and create another. And it will be my PK1 item liability. Okay, I'll just put the same description. Which is this one, the credit line. So I'm creating the liability line here. So I will select my event class here as invoices because I'm creating this one, first one for my invoice. And I will put the side as credit, which is my credit line. Let me put it here as PQ1 item liability. And it is posting to count 2000. I'll come to this account rule later. I have just taken any example. And this will be my accounting class. I think it's a liability. So here you see it's a liability class. Oops, sorry, it's here. I will merge the lines. Now I'll come back to this business flow class later. As of now, I'm not making any changes here, and I'm just creating the another line for my payments. So that is my PK1 payment liability. Again, it will go to the same account because ultimately I have to cancel that liability account. So that's my payment liability. I'll say PK1 payment liability account. Now my event class here will become as payments. And this will be my debit line. Right? And same, my accounting class will be liability. I'll say okay, merge the lines. Now I'll come to my business flow. So you see, I have two liability lines. I have an invoice liability line and I have a payment liability line. I will create a link between these two lines with this business flow so that they know that they are the same ones. So just to create a link between my invoice and payment, I will select my business flow class, which will be same for both of them. So my business flow class here will be my account payable liability, that is my AP liability, and I will select my same class at my invoice account. So I'll just save this and close, and I'll open my item liability, that is my invoice liability account, and I will attach the same class here. So this is just to create a link between these two lines. And it's just a terminology where we call it as invoice to payment as upstream and payment to invoices downstream. So if it is this way, it will be down. It will be your upstream. If it is this way, payment to invoice, it will be your downstream. Okay.
Priya, one more thing.
Yes. Yeah.
If you could just go to the screen.
Yeah.
So I have to specify this link journal lines as business flow, right?
Oh yes, sorry. Yeah, you have to specify that.
Okay, thank you.
Yep. And just put it here as well. Okay, so let us create the fourth line now. That is my cash account. It will be again your credit line. Q1 cash. Event class will be your payments here, and your side will be your credit side. Your accounting class will be and here I'm not selecting any business flow, and I'll simply save and close that. So I've created my 4 lines here. Any doubts on these before I start the multi-period one, the next option? Are we good?
Yes, I'm good, Priya. Thank you.
Okay, cool. Now let's see what this multi-period means. I have another option that I've seen at my lines called as multi-period. So business flow we have already covered. Multi-period accounting. Now this is used to create your accounting entries across more than one accounting period for a single accounting event. Now let us take an example. It can be your expense line, it can be your income line. Your maintenance expenses. So it normally you pay it on a say quarterly basis or annual basis for your building. But these are not for your complete. For example, on the 1st of April of your year, you have paid £1,000 as your maintenance. Now this £1,000 is not for the month of April, right? It is for your complete year. So you cannot just account the complete 1,000 expense in your April month. You have to allocate it to your year because 1,000 is not literally for just April. Similar case of your incomes. You have earned say rental income. Your tenants has paid you for complete 1 year in advance. So you cannot book your whole revenue in month 1. You have to allocate it across your 12 months. So for this allocation, we use our multi-period accounting feature. So that is used to defer your recognition of expenses or incomes across multiple GL periods. These can be your advertisement expenses. So you have launched a new product and you spend say around 10K or 20K on the advertisement. Now this advertisement is for the life of the product, or I'll say at least for a couple of years. So you will not simply book the entire expense in period 1. You will allocate it across multiple periods. So for that purpose, we use multi-period accounting. So you provide the start date as well as the end dates on your invoice line or your distribution to automatically consider your invoice for multi-period accounting. Your deferred expenses are assigned the accrual accounts till they are recognized. So normally once you book the expense, you will book it to your deferred expense account and then you will start booking it to your accrual account once you start recognizing them over the periods. The default formula is proration based of the periods. So I'll come to that user defined formulas. So we have some formulas that we use for our multi-period accounting. By default, the formula is number of periods. Now let us take this example, a very basic example. Your annual maintenance expense, that is say £1,200. Okay, so you paid this expense on 1st April 2018 and this is till 31st March 2018. That is for 12 months. So by default, system will calculate on the basis of number of periods. So on 1st of April, it will post this 1200 to your deferred expense account. And it will also post out of this 1200, it will calculate the value for the month of April. What will be the value? 1200 divided by number of periods, that is 12. That is £100. So it will post £100 to your expense account. That is your actual expense that you incurred for this period. So this is what this multi-period formula does. I can create n number of formulas to calculate these values. It can be on the basis of days. I'll say, okay, I don't do it on the basis of months. I do it on the basis of days. So I do it, if it is 31 days, I'll do it into 31 divided by 365. If it is 28 days, it's a Feb month, I'll do 28. So I'll do it on the basis of days. So the value will be different. So I can create all these formulas here to generate this amount. So this is what it says. And you cannot enter an end date which is earlier than the GL date of your last multi-period entry. Any doubts here? on what multi-period accounting means?
I'm good, Priya, thank you.
Okay, cool. Now, there are some steps to generate this accounting. It says the same example which I just shared. Your annual maintenance expense is 1200. You paid it on 1st July. It is for 6 months. And these are the start and end dates. What will be your initial journal entry when you received this, when you paid this 12,000 pounds, 1200 pounds? Your prepaid expenses or your deferred expenses, they get debited and your liability accounts get credited. That's your initial journal entry. Then every month you will post this 200 because I have used the period formula, the default formula. It is 1200 divided by 6 months. So it will be 200. It will be posted to your maintenance expense account and your credit will be your prepaid expense or your deferred expense account. This is your journal entry for your multi-period accounting. Now how to generate this in the system? You will first create or use the standard formula, your user defined formula on how to distribute the amounts. So like here I'm just distributing 1200 by 6 which is by standard. If you want to distribute it with some different formula, you will first define that formula. Then you will define your multi-period classes. Normally we have your standard classes available in this lookup. I'll quickly go to this lookup to show you the classes, what are the available. I'll just save and close this task. And I'll come to a lookup. We are going to cover all these lookups at next week, our day 3, but I'll quickly show you what are the classes available. You see here it's a table name or lookup name and it starts with SLA, which we discussed yesterday. So these are all the multi-period classes, your item expense, your miscellaneous expense, your tax, your freight expense. So you can add your class here with your maintenance expense, which is your this one, or you can book it against the item expense. So you can create your own lookup code here. These are what comes with the seeded. So that is your step 2. Then you will define a non-multi-period journal line to post the item expense to your deferral account. Now this entry, that is your deferred one, this is not a multi-period entry, right? This is just for your period 1. That is you paid on July. This is not a multi-period entry. So you will create this line, that is your debit line, with non-multi-period option. Okay, so you will not enable the multi-period checkbox for this line. And then you will create your multi-period line for the recognition entry. That is your second entry. So you will enable your multiple multi-period accounting for this line, that is maintenance expense, which is gonna incur every month. So on 1st July you will enter this entry, then on 1st of August, 1st September, 1st October. So this is your multi-period line. So you will enable this checkbox multi-period accounting that we just saw for this line. And then you will assign your journal entry rule, you will assign both these lines to your same journal entry rule set, and same way you will attach your rule set, your accounting method, and then you will schedule your multiple, like we run the create accounting process, we also run the create multiple period accounting process, which will generate these entries for each period. So these are all the steps for your multi-period accounting. Now let us quickly create these lines what I have discussed here. Any doubts on what multi-period accounting means?
I'm good, Priya, thank you.
Okay, now let's just do this example in the system. So I will create my Subledger line rules. Manage journal line rules. Okay, let's go to the formula. Okay, I'll come to the formula part later. I'll just skip the step 1. This I'll cover with how we define the formula.